Be Wealthy and Smart, episode 1600.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about consumer sentiment and prices are lower year over year. The data came in that consumer prices rose less than expected in November, giving investors hope that inflationary pressures may be cooling enough for U.S. monetary policy to be eased more than Wall Street anticipates. The Consumer Price Index rose at a 2.7% annualized rate last month, a delayed report from the Bureau of Labor Statistics showed. Economists polled by Dow Jones expected the CPI to have risen 3.1%. The core CPI, which strips out volatile food and energy prices, was also cooler than expected, increasing 2.6% over 12 months. It was expected to have risen by 3%. The monthly increases were also less than expected, with both the alt items and core CPI gains at 0.2% compared with estimates of 0.3%. This is the first report that encompasses the period during which the U.S. government was shut down. The stoppage disrupted the data collection process in that time. It also led to the cancellation of the October CPI release. This data was originally expected to be released December 10th. Because the October CPI was canceled, Thursday's report did not have all the usual data points of a typical CPI release. The Bureau of Labor Statistics said it was unable to retroactively collect the October data, but did use some non-survey data sources to make the index calculations. On a 12-month basis, food prices rose 2.6%, and energy was up 4.2%. Shelter costs, which make up about one-third of the weighing in the index, rose 3%, indicating progress toward the Fed's 2% overall inflation goal. Shelter had been a major contributor toward elevated inflation readings. Economists may be hesitant to read too much into this report as the start of a downward trend in inflation because of the lack of October comparison data in the release. Still, investors parse through the report as they look for clues on future monetary policy moves from the Federal Reserve. The Fed earlier this month cut its benchmark overnight rate by 25 basis points for the third time in a row. Tom Lee, head of research at Fundstrat, said a tame CPI will reinforce the Fed is focused on protecting the employment market, and that means a Fed put is now in place for the economy. In other words, if the Fed is concerned about downside risks to the economy, the Fed put comes into play, and this would be for stocks to rise. Odds for a January rate cut remained low, but traders began pricing in a higher chance of a March reduction. The CME Group's FedWatch tool showed a 58.3% probability of a Fed cut for the month, up from around 53.9% on Wednesday. Looking at consumer sentiment, the University of Michigan's final reading of consumer sentiment for December showed a modest improvement of 1.9 points from November. The overall index remains 28.5% lower than it was a year ago, at 52.9%. Last December, the reading was at 74. Joanne Su, the director of Survey of Consumers, said this is a very, very substantial decline over a relatively short period of time. Consumers are loud and clear that they believe that the outlook for the economy has soured quite a bit since the beginning of the year. The majority of consumers, for example, expect unemployment to rise in the year ahead. Data published this week showed the country's jobless rate hit a four-year high of 4.6% in November. Meanwhile, the survey's gauge for economic conditions dropped to 50.4, down nearly 33% from a year ago. Still, consumer expectations improved in December compared to November. Sue said, by and large, consumers, even though they think we're a little bit better off than November, still think we are much worse off than we were at the beginning of the year. As for inflation, consumers expect price growth to reach a rate of 4.2% in the year ahead, the lowest reading in 11 months, the University of Michigan said, but it's well above the level of 3.3% seen in January. And again, inflation data for November, also released this week, appeared to be skewed by the government shutdown, but showed that price growth cooled on an annual basis, according to Yahoo Finance. So consumers definitely are not feeling as optimistic as they were a year ago, but inflation seems to be trending in the right direction. And we don't have as much data as we normally have due to the government shutdown, so we'll continue to monitor the facts as they unfold. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available. And all of my podcasts are on my website at lindapjones.com/podcasts. And while you're there, sign up for my weekly newsletter for more wealth tips for your financial freedom. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.